North America, good morning, good afternoon, and good evening. It's a holiday here. That's right, it's President George Washington's birthday. They call it President's Day nowadays. They combined after a while, they put Mr. Lincoln's birthday because he's a February baby, and Ronald Reagan. So they kind of started drifting into that, but markets are closed. We do have an electronic market on the stock indices and oil and gold. We have no commodities, and we have currencies, and that's about it. So it's one of those days. Oh, let's get to the chat line. Skip trial. There we go. All right. As we take a sip of our tea to start off the day. You can see the dollar index on. Let's see, I'm not even getting an update. Am I on there? No. Yes, I am. They are giving me an update on the American. That's the euro. I'm sorry, that's the euro. So I can see the euro up there. Let me go see if our futures contract here at the CME is doing the same thing. Let's see, dollar, Yankee dollar. There we go. And we do have a contract trade going on. Excellent. You can see it's also trying to break down. I don't think that means much. Again, this holiday, these numbers are going to be a little skewy because there's just not much action to them. And over here, you can see the DXY. What's the DXY doing? There it is. Right here, whereas we see right there. And you see this little bar, right in there at the top end of its range. No, not that high up, is it? Did it hit 80 something? Yeah, I guess it's hitting the 80, so it's playing with the top end of its range again. And we'll probably learn more, as we're going through the different pairs trades. And then I saw Jojo, our Führer has come to visit you in Europa. Oh boy. That should be entertaining. I understand that they haven't released anything he has said yet. I can't wait to see that. That should be very entertaining. So, Joey is over there. You can keep him. He's all yours. And I guess he was in Kiev. That's pretty cool. Going back to another suck of tea. Oh, yeah. So Jojo went to Poland, got confused and lost, and jumped on a train and accidentally ended up in Kiev. That sounds about like Joe's speed. That's what he does. You ever see him, like, when the Secret Service are following him, and he just keeps on going into different places, and they're like, no, Mr. President, this is not the direction. And he goes, no, I'm going this way. And then the next thing you know, he's walking through a hedge bush or doing something. It's like, it is we have leadership in Washington now, for the Democrats. It's by committee. It's not, it's not like he's actually making a lot of decisions. He just kind of is the face of the decisions of the committee. It's like the Politburo or something like that going on. It's crazy. But anyway, he's in Kiev, and or Kiev, like they like to say it. I like to say Kiev. It's the southern way of saying it around here. And he's promising something. I heard he promised $500 million for something, as long as he gets his slice. He said something about that because he's the big guy. All right. Let's go on to the other currencies, and you guys can deal with them yourselves. Let's see. Let's go and look at the cable. Let's see what the cable's doing here this morning. Where is that? Let's go over to here. There we go. And there it is right there. Click on that, and you can see. Well, let's first look at the euro. I guess we should look at the euro first. There's the euro up there. You see it's breaking down just a little bit, nothing major. It's been in a daily sell for, this will be the third day. Let's put that line in there. And and it went into the weekly sell last week. Surprise, surprise, huh? And both, the fast-moving algorithm dropped underneath there a couple weeks ago, joined in with the daily sell. You can see all that pressure that was on it. And then the slow algorithm that we follow and basically suggest. We try to slow down. Let me interrupt myself. We try to slow down any rush to trade. We want traders to trade to make money, not trade to trade. And so we say, basically you want the weekly to be coordinated with the daily, and the daily where is one rate, and then the weekly is another rate, and now we're even suggesting to watch that fast moving algorithm versus the slow moving algorithm on the weekly. And you can see a lot of times it's got a very high percentage. It's like everything else with our math. It's about 85% of the time right. It's beating the slow moving algorithm. And once it breaks down and we got a daily sell, one thing for sure is there's going to be some pressure on the downside. As we would say. And that's the action we're seeing here now with the euro. So let's take a look at it real quick on J4X, and I'll dance my way over to the cable from there. So where is that at? It is right right there. There we go. And so there's that pressure. Same thing there, except for it has a little green. The Hinky Ashki is trying to lift up a little bit. Over here we have the same situation. We did see a new high from Friday, but it is now underneath from where it settled on Friday. And you can see the daily, the very short term right there, trying to turn up. And we have that same thing going on right there. It's trying to turn up too. You can see one thing's for sure. We know it's trying to turn up. Relative to the slow moving, it's right there on the edge of it. When we squeeze that sucker out, you can see it's right on the edge of it. No matter how much it looks a little distorted, we know when we look at the numbers how close it is or above it. And so that's what we're seeing over there on the euro. And obviously, due to the fact that we're seeing interest rates, they're kind of lost at the moment in this country. There's a little nervousness going on. On the rate increase, now there's talk of a 0.5 point versus a 1/4 point. And some of the smarter people that I trust are saying that the Fed should basically stop at this moment in time. Not lower, just stop until the data comes in, because what they're following is a lagging indicator. And so the way the Fed is doing things, they're following this lagging indicator, and that's not good. You want them to be following things that are more up to date. Like when we need to buy the wheelbarrow to buy food, because we have to put all the money in the wheelbarrow, that type of thing. We want it to go slow and steady. We don't want them to go mad and crazy. At this point in time, with the leadership of JoJo, who's accidentally got on the wrong train and is in Kyiv right now, that's probably the toughest part of all, is that the Fed chair that we have is very comfortable following the politics, dealing with the Democrats more than anything else. He doesn't seem to be really representing logic and so forth. Let's jump over to cable. There it is right there. Cable's doing the same thing, trying to perk up. You can see that line driving towards the matter of fact, it's plus at the moment. The daily is plus as we speak. We just have a red and a green dot, so it's kind of making us slow down. Now the weekly, you can see the weekly right there, the fast moving. Let's put this up there a little bit better, like so. Which mousey is that? It's that mousey. So you can see here, the fast has been down just as much as the slow. And now look at that ricochet. It's like saying, hey, wait a minute. Maybe we're wrong. Maybe, they don't need to raise rates more than they are doing now in the United States. So this is going to be the horse race as we get closer and closer to the Kentucky Derby. This is going to be the horse race. Does the Fed stay on its policy of trying to destroy the economy, which they think then will slow inflation? Or do they start to realize that maybe they should just stop altogether what they're doing at the moment and let things play out for a couple months? Oh, I mean, one thing's for sure. What Mr. Obama, back in his 2 terms, did was change the Labor Bureau statistic, the LBS, Labor Bureau Statistics, and now every time they look for hope that will show unemployment increasing, it keeps on going down more. So obviously something's broken on the data that they're watching. As we know that there's 11 million people not at work, so how does unemployment keep on dropping? So, one day they're going to have to fix what he broke. And it'll come along sooner or later. All right, now, we go over and we see on J4X the same thing. We look at the cable right there. And again, the curve is curving on the daily. Let's take a peek at the weekly. There's the weekly. And probably the same thing. It's buried. Coming down towards its end. The line is heading south and it's down around 11. Is that 11 or 31? Let me look at that. That is 21? I mean, stand up. I think that's 31. I think that's where we're at. We're at 31. So it probably has a little more room on the downside. The only thing that's catching my eye more than anything else is, on this holiday slowed market, we're seeing the fast algorithm leap towards the 0 line. So that's going to be very interesting. It also might be telling us that we're going to be on the bumpy road, just the way they say it in Harry Potter. Look like it's going to be a bumpy road. All right, and then from there we slide over to, let's take a look at the Swiss. See what the Swiss is up to this morning. Right there. And there she is. There she blows. A couple days on the upside. Look at that curve. It's like, wow. They bottomed out in here. And it's like, finally the hinkies are turning around. That's where the buy comes in. Right there. Even with all this turning, you just, it's just telling you, not yet, not yet, not yet, not yet. Now! Fire! All right. And then from there, you can see the same thing with actually the daily here is trying to break down at this point. So that means hinky-ashky and everything will turn red probably in a few hours up on J4X. Oh, that's the weekly. That is the weekly. Okay. And let's just take a look. And you can see the 3 green. So we're looking at weekly. That's it. There we go. It's got that same curve. Excuse me, traders. Forgot about looking at which is daily and weekly. There we are. And then I imagine when we go to daily right here, you'll see it curving down, which is bullish for the Swiss and bearish against the dollar. Yep, see, curving down. And it's done this little peaky thing right there in the 90, 93-ish something or other. I guess there was some type of panic on Friday. Someone needed something. Inventory. I tell you, the liquidity, some of the illiquidity we see now lately is really something. It's like as if the central banks themselves are not even participating anymore. Maybe they just said, phone it in. Tell me what you want, and we'll just move our prices to that. And just, I think the Federal Reserve is such a tenacious beast. It does what it wants to do when it wants to do it, and it makes it very tough for a lot of countries to deal with that. As we saw at the end of last year, where the Federal Reserve was doing overnight swaps with the Central Bank of Switzerland. What is that all about? I mean, really? Aren't the Swiss supposedly loaded with do-re-mi? They have to borrow from the Federal Reserve a mere $4 billion and another mere, $3 billion or something like that. You can't make these things up. That's the amazing thing, is that, we've seen it happen in our faces. We talked about it here. I showed you it. I showed you how the Federal Reserve was actually doing a swap with the Central Bank of Switzerland. And you would think, wow, can't they just overnight capital somewhere in their country? They have to go to the Federal Reserve. I don't think, when Mr. Trump was president, we saw a little bit more of what they were doing in the sense of the Federal Reserve and the U.S. Treasury. They would label countries as, what did they call them? They had a name for it, where they thought that they were interfering. And a country would get labeled as doing something to their currency, overstimulating or something like that. Mnuchin then was Secretary of Treasury, and he'd come out and read a list of countries, what they were doing every quarter, every 3 months, and who was manipulating. That's it. They called it manipulating. That's what they called it, manipulating. And so then they would also give a list of people or countries who were not manipulating their currency. Wow. Don't even get me started on that, because you'll have to lock me up. But let's put it this way. Countries that you would have thought were manipulating their currency got on the list of not manipulating their currencies. And once in a while, somebody would get on the list that you would go, wow, Japan, Tokyo, Bank of China, and then they wouldn't happen again. So in other words, they basically told them, don't do that. Don't do that. Don't touch that. Leave that alone. And that's what they did. After a while, they realized it. And so Mnuchin would come out every quarter and talk about countries who are manipulating their currency and those who are not. And it got to a very, very small list, if any list whatsoever. But at least he did that. And he gave us, here in the traders world, and the market traders and so forth, a better idea of what they were thinking and what they were doing. At this point, it's just pure silence. We don't hear anything about what they're doing and how they're doing it. All we see is when it ends up on the balance sheet of the Federal Reserve that they've done a swap, an overnight swap with the Bank of Switzerland, we go, don't they have that cash parked somewhere? They can lean against it. I mean, it wasn't like a lot of money in American terms. It was only $4 billion or $5 billion the first time, and I guess it was like $3.5 billion the second time. It was small. It was I think it was a total of $8 billion. And as time went on, we started to learn that was it Credit Suisse who was having problems? The bank itself had a liability of $8 billion. So obviously they weren't really lending it to the central bank. They were doing the Central Bank of Switzerland a favor by lending it to the private bank. So they lend it to the Swiss, and then the Swiss lend it to the private bank, and everybody was comfortable. At the same time, they were trying to sell that bank off. Credit Suisse was trying to find a suitor, to buy the bank, and obviously it wasn't working out. I guess they are the Deutsche Bank / the Citibank of Switzerland. Those two banks here are the Swiss. Deutsche Bank has its issues, major issues, and no one would get near it to buy it. And as we see, I have my most visible of all of what the central bankers are doing is Citibank is still trading only a couple of dollars off its all-time lows. So, we have a better idea of how bad, Citibank in the United States has never really recovered from the collapse of the CDO market in 2008. And so that tells us a lot, So, because there's a lot of money in Citibank, same as a lot of money in Merrill Lynch. But they were able to marry off Merrill Lynch they gave Merrill Lynch almost free to Bank of America. And so they've worked their way through working out those assets and problems, and you can see, Bank of America is doing very well. And then, you can see the same thing with Wells Fargo and Wachovia. Wachovia at the time might have been our largest bank in the United States. Now the largest bank in the United States is JPM, JPM Chase. And so, we only can learn from the actions of what these central bankers are doing. And when we see them do things but don't really talk about it, then you really know that there's a problem, and that's classic with them. So anyhow, we're looking at what are we looking at? We're looking at the Swiss right here, and as you can see, the Swiss is just kind of gaining again against the dollar right there. And you can see it's underneath and in the sell, and it's got just a red dot, so that's pretty cool. The only uniqueness out of it all is you got the fast-moving algo on the weekly heading towards the zero line, and we have the slow leaping up. That's usually a recipe for the turn. It'll start to follow the fast-moving algo, and that will push it back into that weekly sell. I'm sorry, and you can see there it closed on Friday in the weekly buy, which I thought I put the line in there, and I don't see it now. But there it is. We'll straighten that out right as we speak. Put the cute little greenish color in there like so. Make it a hard line like so, and there you are. So it's in that weekly. And at the same time, the daily is warning you. Warning, Will Robinson. Warning. Watch out. And you can see here too. We went into the weekly buy there on the slow. The fast joined in the following week, and it's been it went into the slow, went into a sell, and the other stayed in a buy, and so it's like it's showing you that there's a lot of confusion there, and I'd imagine since we've seen the Swiss, come down from the 100s area, it's had a 10% or a 9% drop. That's a pretty big move, for an industrialized nation / major currency, a 9 or 10% move over all those months. Whereas we see in other currencies that are having real issues, real issues where they've doubled and tripled and quadrupled and so forth and so on. It's like ouch, 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 ouch. All right, from there, let's see, what do we got up on the screen there? That is the daily. So now let's go over to the yen. Which seems to march along with the Swiss, which is curious. Now we're seeing the daily still moving up, and we're thinking, let's see what it says on Chicano Quant. Chicago Quant. Where are you? Right there. And it's trying to do that same thing. Let's widen that out. And it's going. No, look at it. It's going through the same compulsions, I guess you could call it. Right here, just like the Swiss is doing, zing, 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 zing. Now it's back into the buy on a weekly. The daily is just 7 ticks away from a daily sell, and you can see the weekly fast-moving algo is heading down. So this I guess you could say symbiotic relationship that the Bank of Japan and the Bank of Switzerland have. Or their currencies, let's put it this way, it's their currencies that are doing it more than anything else, is fascinating. Why the two seem to be really landlocked is interesting. Now, from there, we go over to what I like to call the laboratory. It's like the experiment. And we watch this experiment every day for almost a decade now here at Dukascopy. We watch the Turkish lira. And Turkish lira has gone from 1 under the leadership of then former Prime Minister Erdogan to now 220 under the leadership of President Erdogan. So his strategy is to devalue his currency and try to stimulate the economy. That's the only thing I can figure. And so far, I don't get enough stats to be able to tell you, but Janos said that he hears that when you go to stores and vendors and so forth on the street, they don't even have a price set. You have to negotiate with them what it is. That's how bad it is. I guess it depends on the currency they have at the moment and what they're willing to transact. But that is something. Now, let's take a look at that currency. Pop it up on the old screen here. And there it is, Euro Turkish Lira. And it's slid into the sell. Let's steal this sell right here. I don't feel like making one. There it is right there. It's in a sell for a couple days. It's in the weekly sell. Now, I put that line in there on Friday. Darn it. And we're in a weekly sell right there. There we go. And you can see the fast one broke down up in here, and it's still down. Not even challenging the manifold right there, the non-linear time manifold. Yeah, a non-linear. Boy, that's a twist of words, isn't it? Non-linear compared to linear time manifold. I googled that a few times. They don't have. There's no. It's my invention. There is no non-linear time manifold. When you Google non-linear time manifold, nothing comes up. They go nothing, nothing, zero. Sounds like a Rocky Balboa thing there. So there we are with the Turkish lira. It has its action days. You can see what they did on Friday. A little upsy downsy going on there. There's all-time highs right there. A little more than 3 weeks back now. It is curious. What we're seeing here with the Turkish lira. They're trying to smooth it out. In other words, it looks like it's trying to find some type of slowing down. That's a good thing. Not sure. I guess the challenge of higher interest rates is having a positive effect on the currency, which is interesting. Again, I don't know. And now I know what I heard was I'd forgotten all about it. The earthquake. I believe, unfortunately, they're up to almost 50,000 people who have been killed from it. So I understand money is pouring in. So money is not pouring out; it's pouring in at the moment for relief and so forth. So that's probably what we're seeing with the Turkish lira. Money is pouring in. They're buying Turkish liras so they can help people out. All right, now from there, let's put it up on J4X and just confirm what we've been seeing on Chicago Quant, and that is there it is. There's the daily. And let's widen this out because it is looking a little different. You can see it was higher and it's heading down, but it is still a little bit higher from the Friday settlement. And J4X is reflecting that very clearly. We are in, you can see they had 3 red bars and the green line is underneath, so it is reflecting the sell that we have right there. Let's take a quick look at the weekly just because of the fascination of it all. And you can see there, they are burying, look at that, burying the fast and slow stochastic down. That's kind of neat. And as you can see here, our weakness is very clear. And this week, the green line finally broke. There we go. All right, traders. Now, from there, we dance our way over to, where do we go from? We go to the 2 currencies. Now, let's just see right from the beginning. Let's see if we can get oil up on the thing here. And I wanted, what I didn't do? I wanted to change the oil contract too. Let me do that because it's got to be expiring at this point. Let me just let's go find it. It's probably gone. It's got to be gone. The March contract has to be gone. Now they got one more day in it. How about that? Right there. They are making a trade in it. So we'll change that tonight, and we will be in the April oil starting tomorrow. So you can see there it's trying to lift up. You can see they've smacked it down from the low 80s down to the 75 area, and now it's trying to perk up a little bit. We slid into the weekly sell there. You can see the same thing right here in the back month of May. It also has slidden into the sell, but our fast algo is reaching up and through. Now in this case here, they're trying to turn. I don't think that doesn't look right, but we're going to double check that. Let me just double check what we sent out on Friday. But I thought that we let me go to the Mr. and Mrs. Mouse situation here, like so. And let's just open up what chart we sent out on Friday afternoon in May. That's corn. Oh, they're reporting that Biden got on the wrong train and ended up in Kiev. How about that? He's a funny guy like that. He don't care. He don't care. It's okay. There you go. There's May crude, not May corn. So yeah, it was in a cell. I'm not sure what in blazes is that. We'll double check that, straighten that out. But the back month, matter of fact, let's do that right now. Let's go like that. And that is the Friday chart. So let's go take a look at. And then what we're going to do is we'll look at Canadian and see how the Canadian is relating to the movement in oil. But I just want to double check this back month situation. Let's see. Crude May. There it is. May crude. There it goes. Yeah, we that was a sell. That was a smackadoodle down. That's the 16th and that's the 17th. That needs to be fixed. Let me see if we can go like this with it. It's getting changed no matter what. So let's go like that. No. I went to the wrong place. Let's cancel that. Alright, let's do it this way. There we go, like that, okay. And then I go like that. And then I go like this. And I go like that. And we hit it for like 3 days. See what happens. Nope, didn't adjust it. We'll have to fix that. I'm not sure what's going on there. But as we show you on this chart right there, that's how it went out on Friday. Because I'm looking at the exchange contract right now on another screen. And so it went out minus like that. That minus gig right there. So it was not in a buy. Now today it's lifting up. That's great. Hooray for it. But it's messing up the algorithm. We'll have to straighten that out. The high is like, it's really up there. It's like, it's way up there, as you can see. And here the high is and low is right there. It's distorted. What is it showing as a close? 76.75. We have 76.88. That needs to be fixed. The low. It's the high that needs to be fixed right there. The high is way up there. So we'll have to fix that. Alrighty. No questions today. Everybody's taking Monday really off, huh? I'm just out here just having fun. Alright. So from here, what are we doing here? We go to the Canadian. Let's take a look at the Canadian itself. We're going to throw that up on J4X. There we are. And you see there the strength. Does that mean Putin will go to the Crimea? Would that be funny? Putin goes to the Crimea? I think he's afraid they'll shoot him. He doesn't seem to step out of his office too much, does he? Let's see. From there, we go to, let me just close this. And so we can see the Canadian. Let's put the Canadian up on Chicago Quant too. With oil lifting up today after selling down, let's take a Canadian on here too, like right there. There we go. CAD, right there. And you see CAD is heading down because oil is lifting up. And you can see the spike we had on Friday up, trying to go after like what? Almost the yearly high. These are the yearly highs, which is pretty impressive. And that's what we talked about too. We thought maybe this thing could get up to close to 35.5. I don't really expect to see a lot of strength out of it. But we are in a second week also. It slid into the weekly buy. And the fast moving, and that, that's the reason I remember now saying this on the webinar last week. When these two move up together, you just got to worry that this could be a little bit more push. So we could probably see 36s with the Canadian. That's what I probably said last week too. That's what I'm thinking looking at the math now. And then let's put that weekly signal in there too at the same time, like so. There we are. All right, now from the Canadian, well, I'll tell you, we've been watching these two pairs. We've watched the Canadian against oil, for a couple years now, and we've been watching gold against the South African rand for like a year and a half also. And they have really, not the Canadian as much. At least the Canadian is still holding its characteristic. But unfortunately, that craziness that happened with the president down there in South Africa just has really hurt the currency more than people are talking about. If anybody's talking at all, besides me. Let's check it out right there. There's the South African rand. You can see it's, it spiked up pretty well with these last couple of days, up into the 18s. And you can see here, it's in that weekly buy now for, 5 weeks now, right? And it's taken out the initial news. That's what the little box there is. I guess it should be like a warning. It should be like yellow. Emphasizing like warning, Will Robinson, warning. There we are. So that was the political avalanche, and now it's kept it trapped, and now it's making even higher highs. And our weekly's been following that pretty comfortably. And you can see the daily has been comfortable about it too. It's been in that weekly buy now for going on a third week. What is that? There's 3. That's 5 days. There's 5 days. And there's 2 days. So 12 days now we're in a daily buy. And for, you can see here, we went into a daily buy here, slid into a daily sell for 2 days and went right back into the buy again. So whatever, I guess it was the triangle more than anything else. I think, matter of fact, that's why we were talking about flags and triangles last week. And we actually labeled the webinar about that, about the triangles and the flags and, the way of counting them and how to understand their actions. And then we had a live trade going on at the time. Timothy was looking at his Canadian, what's he following? British pound yen or British pound dollar, one or the other. And we could see that action and the triangle that was formed. And I said, here you go, watch this. Now this is the triangle formation and blah, blah, blah. Pat myself on my back, and I'm hurting my arm right now as I pat myself on my back. But it was, it's the triangles and the flags and so forth are well worth watching and trying to understand. And we have some of the old rules from W.D. Gann and R.N. Elliott. So we have a good understanding of what they're trying to do. And Robin's been talking about the same thing. He's been seeing the flags in the stock market, the U.S. stock market. And he's seeing the potential for a nice move on the upside. It's trying, let's put it that way. And I would say that just the last couple days, the Fed is basically shaking it up more than anything else. They're not sure what to do. They know that the Fed should stop raising, and they may. This may be the last one, this half a percentage point. But they just don't. The Fed is just lost at this point. They just don't have any direction that's commendable, I guess you could say, or acceptable by a lot of us. We realize that they, when I complained for all those years that the interest rates had been sitting at 0 and minus, and that was wrong. And I'm complaining now that they're trying to take up and slow the economy when you need growth to get out of this problem. So the Fed seems to just do the wrong thing at the right time constantly now. They just seem to be totally lost. It was bad enough with Bernanke. And then Yellen, she literally, for 8 years, just left interest rates at 0. When we had a healthy economy again. And Bernanke's idea worked. The problem is that the politicians got a hold of it and are not letting it go. They love all that free money. So that's where their heads are at. All right. And so that completes us. Oh, we didn't. You know what we didn't do? We didn't put the South African rand up on J4X. Let's just show you that too, right there. And we didn't look at gold. Let's put the gold up there. You can see here, South African Rand going this way. Let's put gold up there. And there is gold. And it's going down, doing the opposite. Now we got a little bump going on today. Let's check it out over here on Chicago Quant, see what gold looks like there. We click on that right there. We take Mr. Mouse, click there, and there is the gold. Sideways action, look at that stuff. 18. All right, let's do this. Let's fix that. That's the April contract. And let's put default in there, see what that does. Does that straighten it out? Yeah, it does. Okay. So you can see here, April gold is just firm. Did we really get in a buy on Friday? I don't think we did. Somehow or another, some of these numbers seem to be very skewed. Let's double check that chart that we sent out, and we're going to double check the exchange because we just seen what they did to oil, which it doesn't reflect the reality to it on Friday. Now here is April gold. And futures, April gold, and there it is. So April gold was, no, that's not right either. So that's going to have to be moved and adjusted. But it did not go into a buy, and we're going to show you from our Friday chart right there. See, it was in a sell, still is in a sell. It's trying to lift up, but it is not in a buy. It is definitely not in a buy. Not like the way it's reflecting that right there. So we will straighten that out for tomorrow, and that'll be fun. And there we go. So now, I guess if we want to look at screwy things, let's go look at silver and see if they've messed that one up. Yeah, they messed that one up too. Because silver did not, I repeat, did not go into a daily buy on Friday. Let's put her up on the screen for you. From Friday. Friday. There it is. Yeah. It was close. No doubt about it. It was close. And it was trying. And as you can see, it was trying to lift. It was trying to lift. And there it is there. Is that it live? Yeah, that's it live. And so it was trying to lift. There's no doubt about that. But nowhere near as aggressive as it did. And you can see the weekly is still in its weekly sell because it's not, the bad tick in daily is not interfering with the weekly number. So that's the trust of it all, the whole situation. And we'll get rid of that now, and we will close that. That's why we don't send out charts on holidays, even if they're trading electronically. The only one I would semi-trust, I don't have much of a problem, is the currencies. The currencies are pretty consistent when it comes to their level of accuracy and so forth, the charts on a holiday. They may be illiquid at times. They used to be very illiquid. Now that we have quantitative easing, they need to adjust them and move them around and treat them, as if it's important, that type of thing. Because it is important. So, where do we go from here? We go to, I guess we go into the commodities. We got a choice. Anybody want to see silver? We sold silver. Does anybody want to see copper and platinum and palladium, or do they want to see, you want to see natural gas? Because we have to fix all of them in the end. Nat gas. Let's go see nat gas. There's nat gas. It's hitting that Fibonacci that we talked about, the 225 area. It's actually hitting that. That's the amazing thing. On Friday it was down to 228, As was it Metho says, he's waiting for it to go where they start to give it away for free. I hear you. Isn't that amazing? In Europe, they're paying $26 a cubic foot. In the United States, we're paying $2 a cubic foot. Wow. Talk about bad government, You can take your choice which one's the bad one. That is wild. That is truly wild. All right, now, brown cow. Let's see what else. We've been looking at crude oil, the natural gas, and natural gas. We go to that Spanish oil company. Let's see what the natural. We'll put up the $2 and change natural gas in the United States right there. So that's 225.20, 224.7 bid. Now what we'll do is we'll go look at the there's a oil. It's an energy company in Spain that its stock is really linked like the way Chesapeake Bay is here in the United States. Chesapeake Bay is the same way. And so we'll take a look at that. Right, where's it at? It's right underneath it, and I just missed it. So there's that. So there it is, right there. There's the Spanish company, and it's trading in the 26s on Fridays. Let's see where it's at today. It's lifting. It was like 26.30 or 26.25 on Friday. Now it's trading it's heading for 27. It's a very strange. Can you imagine you can buy something for $2 in the United States and you can go put it on a ship and sell it for $27 or $26 in Europe? That is just an astonishing arbitrage, That blows my mind. You would think that you could walk across the Atlantic at this point because there'd be so many ships that they would be right next to each other and you could literally walk on top of one ship to get to the next ship and you could actually walk to Europe. Another sip of the tea there. All right, now we go over to, let's take a look at platinum and palladium. There's the palladium. Not sure. I'll have to check the contract, see how it's doing. But I don't think it was in a buy or we had a green line over there. That's Thursday, that's Friday. I don't remember it looking that way. Let's see what the chart looked like that we sent out for palladium on Friday. Here it comes. Yeah, see, it was down on Friday. And that weekly was, telling us the same story. Even it's trying to tell us the same story here. And that's only because that's up a little bit from Friday. So it's pushing it up through the nonlinear time manifold. Right there. So time is nonlinear. How about that? Al Einstein could be right on something there, right? All right. Let's see. What do we got from there? We go to the platinum. And it's the April contract. There it is right there. And you can see it, they're showing a strength there. We don't save the chart, so I can't tell you. We have nobody following it. You can see the weekly is trying to turn. And you can see they're lifting it today, but we got down close to the 900 area from the 1100 area over the last month. And that's interesting. Usually palladium leads the market, and boy did it lead it this time. As it broke down, gold right there also started to break down. Took another week. You can see it started to dip. They had to bring in some buyers, and then bang, as we always say, take it up to take it down. If traders want to take something down, they'll lift it up a little bit first to get some buying interest. Same thing with the silver. You can see that big dip right there. What was that? That's the 21st of January. Let's see what the 21st of January with the platinum looks like. Is it the same day that they take the dive? There's the 18th. No, that topped out even more. That was back on the 11th. So they really were throwing pressure onto the metals market, and it had to join in. It's just a matter of time, because the platinum is usually a good leading indicator. And so you can see here, palladium started to go through the same capitulations. There's the 18th, and then the 11th is right there, right? That's a third. Somewhere's in there. Where's the 11th? There's the 11th. It didn't pick up on that slam in the platinum, and it was just a constant drift. Ooh, what do we got here? We got something. Someone's ringing the bell. Cool. Alrighty, let's see who is trying to talk to Doc. There we go. Yep. Well, be a neighbor. Let's see what he says here. All right. All right. So, from the palladium and the platinum, and we've seen the natural gas, it is what it is. And then at the same time, we see the U.S. stock market still battling to try to get up, even as the Dow Jones Industrial Average closed in a weekly sell. Now the what is it? The Tech 100. Let's go over to that. The Tech 100, right there, is battling. They're still in a weekly buy. You know, pushed into the sell on. I thought it closed on a sell on Friday, and we'll have to check that out. And then at the same time, the S&P 500, same situation. Now that is still in a weekly buy like the other, but notice the fast is also breaking down in that. And you can see here, this is breaking down there, and you know, we see that pressure on it. And then we go over to the S&P 5, the Dow Jones Industrial Average, right there. And you can see, I think that's wrong. No, that's right. And you can see the pressure on that. 3 days in the sell. And you can see now it's leaping back up through the sell to the buy again. How about that? After closing in the sell on Friday. Let's put that line in there. So we have, like I said, the Fed Reserve has got everybody upside down. You know, they really are very confused on how to do their job. I think that's the best way to describe it. They are really lost on how to do their job. Alrighty. From the stock markets. Oh, you know what? Here's one I wanted to show you too. When looking at the stock markets in the United States, the best one of all is to look at not the best one, but one of the more fascinating ones to look at is the Russell 2000. And the Russell 2000 right there did not and was not reflecting much weakness whatsoever. Now the fast is breaking down there. But look at this. The slow is not even breaking the manifold on Friday. Not even breaking the manifold. And the daily has been a daily buy for 5 days now. They don't care. And that's the most speculative money of all, right there. You know, in other words, when you're trying to follow money in the marketplace, you know, the stock marketplace in particular, you want to see where speculative money is going. You know, so there's what we used to call it, not easy money. We had another name for it. Hot money. That's it. Hot money. So I don't know if many of you have heard that expression, but hot money is money that's looking to do a short-term trade, like a short-term position of maybe a couple days or a couple weeks, and we call that hot money because what it wants to do, it likes to move around. It doesn't want to sit still. It's hot. It likes to, it's like trying to hold something that's hot, real hot, and it burns your hands, and you flip it out of your one hand and move it into the other hand. It's like, ow, that hurt. That's hot. And that's what Wall Street used to refer to when looking at stock indices like this. Hot money. Hot money. And hot money is saying no, they don't want to sell this. And they're not interested in selling this. And that's what the Russell 2000 is showing. So that is the game at the moment. They don't want to... hot money doesn't want to go. Hot money knows that the Fed, usually hot money is pretty good at picking direction. And I would say that that they know that the Fed is trapped and it has to do something smart. And that's a headache for the Fed to have to do something smart. So hot money is saying, no, we're going to stay here. We don't think that, and so the Dow Jones Industrial Average went into the weekly sell last week, and what is it doing? It's turning around. It's turning around and trying to bounce back up again. In other words, they don't have a clear direction right now. They know that the stats make no sense. The fundamentals that the Fed is talking about each day and looking at, and money moves around on, is not really indicative of what's going on. I know that's strange to say, but that's exactly what it is. And so hot money is telling us no, because believe me, when you don't have to believe me, you can just see it on the charts. When we don't really see a far enough back with this, but there is August of last year, and when it wants to turn down, it'll turn down. It can break down very quickly when hot money says let's get out, and we had that October low. Here's the October low right there. It happened before the October low. I mean, it did the same thing as everybody else, but in September, they punched this thing down. Hot money will get out first, and hot money stepped in fast right here. Look at the size of that day for the low, and that was the 1650 area. And as you can see there, it has never ever looked back at that 1650 area and is hanging out. Matter of fact, it's having a hard enough time breaking down from the 2000 area. The all-time high, I believe, is 24. So it's halfway back to that, and it's not willing to relinquish their position. In other words, it's hard to get into illiquid little stocks. So once hot money gets into something like that, they're going to hold on until they get what they were looking for. And when they bail, you'll know they're bailing. Now, not many people talk about hot money anymore, but we used to see that all the time, and talk about it all the time. There were newsletter writers back in the old days who used to follow hot money. So, all right, traders, this is Doc. We're going to go enjoy the day, celebrate George Washington. This was an exchange holiday because he said at the buttonwood tree out in front of the New York Stock Exchange nowadays, and the buttonwood tree is always there. They always have a buttonwood tree growing out in front of the exchange, and said, hey, let's trade some bonds. And they started trading, and America realized that they were allowed now to be aggressive investors. And they were. And that's why we are what we are today. So this is Doc from North America saying happy birthday to George Washington. Happy birthday to you. All right, traders. Later. Talk to you tomorrow on Tuesday. We will sing Happy Trails again. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.